Let's talk about it, talk about it, talk about it, talk about it.
Woo! Yes, sir.
baby.
Back.
One day.
Ladies
Woo!
and
Yeah, I'll get that again.
gentlemen.
One out of
Episode.
every 45
I
episodes.
mean,
That's
nothing's impossible, but with the makeup of that thing, it's damn near close.
Yeah, it's gonna be tough. It's
The
gonna
other
be
one was
tough.
built for
Yeah,
it.
but if anyone can make it happen,
Is you.
it's us.
Oh.
This
The
is,
eight.
this
It's
is
an
a
energy.
team sport.
It's an energy.
Yes, sir.
I'll give all the energy I got.
Yes, sir. So episode 47, guys.
Episode 40.
46.
Wow.
46,
Can't wait to do it.
baby.
Excited
Holy
for
crap.
it. Yep.
Wait, is it 46 or
Take
47?
I thought
Three.
that's why we restarted.
No, wait, what episode is
46.
46? No, it's not.
Oh, yeah, we ran back 45 last week. That's what that was.
Okay, so
Yeah.
47.
46.
Technically, yes.
I mean, technically, we're on like 51.
50, yeah, something like that.
It's a sales report.
No, we kept going with it, though. We kept going with it. Are we keeping this?
Yes, now that you said that.
Ladies and gentlemen.
We have a real special episode for you if you can't
Sorry
tell.
for the confusion. Episode 46.7.
46.7. I like it.
46.7.
46.7.
46.7.
46 and a
Welcome
half.
back.
Yes, sir. Yes, welcome back.
Sitting here with our beautiful plaque,
Yeah.
our wonderful team,
Yeah, beautiful.
our
too.
massive gong,
Yeah, big on.
Massive.
Remy.
Remmel.
It's a beautiful day.
Massive.
The
It's
boys.
a beautiful
Dub
day.
boys.
The boys.
W's.
The Bears.
These
Dub-
boys are W's.
Boys. It's true.
Bunch of dubs.
Absolutely.
True. Today's gonna be a really good episode, guys.
I'm
I
excited.
think so.
So,
I'm fired up.
are you?
Yeah, I'm fired up.
I'm on fire.
Don't worry, I got a
Well,
flyer sandwich.
Yeah, I'm not. I appreciate that.
Gotcha.
You know how I get.
So let's turn it up a little bit.
Yeah.
Without further ado, my name is Thomas McCauley, your head of business development, and to my left I have.
Frank Grizzly, CEO, COO. Jeez, God.
Are we doing
I'm
governments
loving
today?
No, his solemn voice threw me off, honestly. Frank Grizzly Lawando, the COO, how you doing?
Frankie D,
Dan.
the CEO.
How you doing? Appio Fragoletti, Director of Banking Relations.
And introducing the number one A team in the world.
Yeah! Don't dent that gong, bro. Damn.
You never know. You never
I don't
know.
know where our
hard-headed
CHO
mother.
is, but he's somewhere running around.
Yeah, Louis.
Yeah.
Louis, I fed him
he's-
gave
he's
his
out
dinner
spreading
before.
You know, he had some CHO duties to attend to.
Yeah,
correct.
So me and him have a meeting after work. So he's probably
taking a
prepping
nap.
for
Okay,
it.
okay.
Yeah, he's prepping for it.
Respect.
Yeah,
Good job, Louis,
we
wherever
meet
you
once
are.
a week on how to keep the team happy.
Apparently, more belly scratches isn't always the best answer, but he keeps pushing for it. I don't
He's
know.
pushing. pushing
He
for
is
it.
pushing for belly scratches. He's pushing for more lunch breaks.
Yeah.
You know, he's pushing for everybody to get out of their seat and pet each other. You know,
He's corporatizing.
you know, like every 15 minutes.
he's
Put your ear on the
Corporatizing,
ground
dude.
for a
Yeah.
few moments.
Yeah.
HR's having a hard time with him, but it's
rolling
okay.
over every other minute, playing fetch.
The fact
Well,
that he got
he's
10
doing
minute
his
naps
duties.
We're
done,
taking his ideas into account, and we'll probably implement one or two. You know, so
I agree.
I take his word seriously.
I vote for the belly scratches.
Yeah, belly scratches work.
They do.
Could you imagine all the sales guys just dropping down?
Bro,
It's
we
like,
walk out of
scratch
the
my belly.
The worst part is I could see like 6 of them
was gonna
really
say,
getting
I
into
couldn't.
it.
No,
Probably
definitely,
you know.
definitely. They're sick mother effers. They're sick. You got to be sick to be in sales. That's something that they would do.
Just laying on his back. Get over
Yeah,
here.
yeah. You know it's belly scratch time every 15 minutes. Louis said so.
Company mandate.
God.
Okay. And
On a
Frankie,
serious
what are we
topic.
doing today?
Yeah,
what
so
are
we're
we
gonna
talking about today, Frankie?
We're going to talk about our episode today, which is all about Louis. No, I'm just kidding. Today, we're going to talk about every single financing product that Lexington offers and just financing solutions in general for small to medium-sized businesses and even large corporations through alternative lenders, through traditional banks, and everything in between. So some of the products that we're going to touch on today, and number one, what we specialize in here over at Lexington is lines of credit, which obviously Lexington runs our program over here. He's going to dive deep into that today, very knowledgeable in the whole thing. Number two, SBAs, merchant cash advances, equipment financing, term loans, asset-based lending, accounts receivable financing. So those are the 7 we're definitely going to dive into. Who knows? We might even dive into other ones.
There's more.
There could be a bonus product.
Uh-oh, stick
I
around.
definitely feel like we're gonna jump into like some subtopics within
No doubt.
each
Yeah.
product because
No doubt.
each products for the most part have their own subcategories that we can definitely break into.
Yes, sir.
But of course, here at Lexington, we do specialize in lines of credit, as we all know. And I'll touch on our lines of credit. Of course, feel free to chime in whenever, because I know all of you are very knowledgeable as well.
Yes, sir.
But why are lines of credit the most sought after form of financing there is, point blank?
Why,
It's because,
Appio?
it's because you have so much flexibility. And who doesn't like having flexibility in their life? Right? Everybody wants flexibility.
I wish
You
I
want
could
that
touch my
balance.
toes.
I wish I
I
could
wish I could
too.
touch my toes.
That's
Let's all
test-
try. Let's all try.
That test and
Who gets closest?
Tom,
bad.
two hands,
Bad.
all right? 2 hands.
2 hands.
Come
I'm
on.
sitting. Come on. Give me a break here.
That line of credit's more flexible.
I agree.
Just a little bit.
Yes, sir.
But there's all different types of lines of credit. There's your traditional lines of credit. There's your alternative lines of credit, and then there's collateralized lines of credit like your HELOCs. But a line of credit is so important to have for your business because, and you could ask any good CPO.
CFO.
You could ask any good you could ask any good CFO, any good CPA. That's what I was trying to say there. Holy cow. That you should always have at least 10% of your gross revenue in the form of a line of credit at all times for anything that could ever pop up. Whether you're looking to purchase a bunch of inventory at a discounted rate that you got offered to you, a new contract arises, you just have any type of opportunity that comes within your business, or something negative happens within your company as well, you have that blanket to fall back on. Now, your line of credit, it's a revolving source of capital, as everybody likes to say.
Mm-hmm.
You can spend your money, you can pay it back, you can spend it again, pay it back, spend it again, pay it back. Just like your credit cards. Your credit cards are technically lines of credit with a physical piece of plastic in your hand, and you're just limited to what you can spend it on. But having a $100,000 line of credit, getting approved for it when you can get approved for it. You don't want to look for financing, ideally, in the most ideal situation, when you need it. Because when you need it, it's typically a little too late. Not always. You know, we can definitely work something out for you. Us here at Lexington, being that we specialize in lines of credit, we have a bunch of different line of credit programs. We can definitely find one for you. But you want to get your line of credit at the cheapest rate and the best terms. Preferably a forever revolving line of credit based off of the prime rate. So what you do is you go and you get your credit in the right position, you make sure that you're not overutilized on anything, and you apply for your line of credit. You obtain it, you have it in your back pocket, and you use it for anything that you ever need. Hopefully, you never need any of the other 6 or 7, financial products that are out there because you prepare yourself so well and that you're good to go for any situation.
I think my favorite part about the lines of credit is that it's, as you said, revolving because, term loans are great. They're phenomenal products as well. But, here's an injection of cash and then here's revolving cash, So, just off that alone, obviously it makes it one of the most sought-after things, You get $50,000 on it, take out 20, pay it back, and you got it back again the next month, 50 sitting there waiting for you. So it's definitely versatile. It's really good. And I rank it up there over the term loans just because of that.
Yeah,
Definitely.
100%. You take out a $50,000 or a $100,000 term loan. I hope that you spend that whole $50,000. I hope that you spend that whole $100,000 because no matter what, you're paying interest back on that money.
Exactly. Yep.
With a line of credit, if you only need $90,000, $80,000, $50,000, you only spend what you need at that point in time, and you're only paying interest on what you've spent. But you have that other X amount of dollars available to you at all times.
Yep.
That's why it's so important to have a line of credit. I have a line of credit. I know most of you have your lines of credit. Pretty much everybody owns businesses, and you can get yourself a business line of credit. You can get, if you have phenomenal financials, we can talk some serious numbers. If you don't really have the best financials, you're taking loss on your taxes. Maybe you didn't even file your taxes, or you're a brand new company. We can still get you a line of credit. That's a forever revolving line of credit. You renew it every 5 years. And you always have that peace of mind. Always.
Yeah.
Always.
Well, that's one of the biggest things is just like life, business. You never really know what's going to happen. You never know when you're going to need a quick $20,000 to jump on an opportunity, or maybe something happens to your building and you need to get it repaired, or you're a truck driver and your engine freaking explodes. You never know what's going to come up. So having that just in the background, accessible, quick injection of capital is, like I said, the most flexible thing possible.
Yeah. Yeah, and I feel like I've mostly been talking about uncollateralized lines of credit is kind of what I was geared towards. But even if you want to talk about collateralized lines of credit, you could put up an asset to get your line of credit. Most common being your home equity line of credit, your HELOC. Of course, most HELOCs they're reporting to your personal credit, and also when you take out a HELOC, the banks they typically require you to take out at least 50 to 75% of that line of credit when you first obtain it, which is why I like to veer away from them. But if
I
you're,
always found that crazy.
it is definitely
Yeah.
crazy. I'm here for a line of credit for a reason.
Yeah,
Right?
I'm not
I
trying
want
to-
this peace of mind.
Yeah, 100%.
Right. You have the UCC fund, you have the lien. You're not risking. The bank's not really risking themselves.
No.
The asset's still here.
If anything, they're risking more by making you take that money out right away. Like, I just want something to put
And
on
HELOCs
to.
aren't much cheaper than getting a business line of credit, like maybe by like a point or two.
Literally.
That's why I like to have to put up collateral, to always have to think about that, especially if it's your primary property.
Yeah.
And then to have to draw down on most of the line of credit, to start with. And then on top of it reporting to your personal credit. Meanwhile, business lines of credit will report to your business credit. Definitely not that advantageous, but sometimes you gotta do what you gotta do, especially maybe if you're a contractor or you're in real estate and you're trying to get some equity out of your home to purchase another one. Especially if it's not your primary, then I would definitely think it's not such a bad idea. But you definitely have to have a plan set in stone so that the second that you get it and you get approved and then you have to draw from it, that where you're putting this money tomorrow.
Yeah. You
That's
have a
what-
project lined up. I'm sorry, you have a property lined up, ready to go at a moment's notice. And
Which is tough to time though, is what's annoying.
Yeah.
And that's why it's cool to get one through your business instead, because you know how the real estate game goes, dude. Someone could be up on market, you got outbidded the day before, boom, it's gone.
Now
Someone
you
made an
got it.
off-market deal, paid all cash, boom, it's gone. And you've been setting up this HELOC for a month or two, trying to get it ready, trying to time this thing up perfectly. And as we know, life, it is all about timing, but it's hard to time certain things out.
yeah, now you have a couple $100,000 sitting in your account. The property's nowhere to be seen.
Yeah.
You got to find a property to put that money into right
Now
away.
you got to pay on it.
Yeah,
So
and
definitely
we
tough.
work with a ton of real estate investors.
Yeah.
A freaking ton of real estate investors.
They prefer our product.
They prefer our product. And if for any given reason we're not able to get them the dollar amount that they're looking for, that they need, at least you have $50, $100, $150, $200,000 in our business line of credit that you no longer have to put onto your HELOC.
Yeah.
That your HELOC reports to your personal credit. Now you have high utilization. Now your credit profile is being affected. Use the business line of credit as much as you can, and then if you need to fall back on that HELOC, I think that's a great decision.
Agreed. Yeah. So I mean, at the end of the day, that's why lines of credit, I think, are king.
Yeah.
That's why every business owner seeks them out, and it's the most used financial product right now for small to medium-sized businesses. It's just because it's so flexible.
Yeah.
So every business owner, like Appio said, if you don't have a line of credit, try to set one up. One last thing I'm going to say about it is it's cool if you have good credit or subprime credit, you can still get qualified. There's traditional financing products through banks that we can help facilitate for you guys, and there's also alternative lenders like Headway, On Deck, Idea Financial, Rapid, Blue Vine, Fundbox, etc. that offer lines of credit for people below 680 credit.
Yeah.
So it's definitely really cool that there's other people out there who are willing to work with business owners.
It really is, and there's different structures to them. There's different structures, like those alternative lines of credit. They're structured differently, but they're used in the same way.
Yep.
And I'm going to take up a little bit more time. Sorry, not sorry. I really like that. What a lot of people are doing, and what we help a lot of our clients do, is obtaining some of their business credit cards as well. A lot of 0% interest business cards are phenomenal to use for your business because it lets you float through. I'm kind of just going with this this real estate topic here. It lets you float through your renovation phase, not have to pay interest back to the banks, and we have methods in which you can pull cash off of these cards and have it in your bank account still at 0% APR and utilize it every which way you need to.
Yeah.
And I think this is going to transition well into another product. Sometimes our lines of credit, we like to go a no document route if we can, but sometimes a line of credit might end up becoming SBA backed.
Yep.
The SBA puts their piece in. The bank doesn't want to front that whole risk, so the SBA will back that up there. You provide some financials, and it's a little bit more of a tedious process, but we've gotten them done tons and tons and hundreds of times
All the time.
already with the SBA backed products, and those are good products as well. I'm a little bit biased towards SBA products personally. I think that the terms, I mean, they're long terms, which some people want, but y'all know my stance on term loans versus lines of credit for sure.
I totally feel you. So, let's dive into it. So SBAs, we'll talk about the four main types out there right now. There's more really to it, but we'll go over the main four that everybody's kind of seeking out right now. So SBA stands for Small Business Administration. It's the second most sought out business financing product for small to medium sized businesses. It's funny, when we got in this space, everybody wanted an SBA. Then about a year in, it's like everybody wanted a line of credit, and still to this day, it's a line of credit. So
They
it's really
figured it
funny.
out.
It's really funny. But yeah, they figured out what's a better product. And I agree with Appio. I think a line of credit is way more advantageous, and that's why we specialize and offer different line of credit products for business owners with prime credit or subprime credit. So the SBA stands for Small Business Administration. It's a government-backed loan that's given out by traditional banks and alternative lenders. So banks like Chase, KeyBank, Wells Fargo, TD Bank, PNC Bank, basically every major bank, national, regional, and even credit unions offer SBA. Then there's also alternative lenders like Oak Bank, it's not technically a bank, Newtek, and they offer Grasshopper. They offer SBA products as well. In order to get accredited by the SBA, it's a long, drawn-out process. It's not like something that's very easy. You have to get approved by the government. There's only about like 40 or 50 approved SBA lenders between banks and alternative lenders, so it's not something they just like give out like candy. So it's definitely like a very prestigious thing to be able to offer SBAs. Right now in our space, actually, Funding Circle got SBA approved like last year, but they took it away from them. I don't know exactly like what happened, but they're not even able to offer them right now. So it just goes to show that it's like not that easy, and apparently they've been working on it for years to get SBA back.
Prestigious.
It's very prestigious, no doubt. So there's going to be 4 major types, and what's cool about it, before I dive into that, is that it's government backed. So, for instance, if the borrower defaults on the loan, the government is paying out the bank. So the bank really has no sort of, I guess,
Risk.
risk.
Yeah,
Yeah,
no
there's not really
downside.
risk. So the government is basically going in and insuring this loan for the bank or the lender, which allows them to give the rates out very cheap. And that might be the only thing that's more advantageous about the SBA, is that the rates are going to be maybe like a point or two cheaper. That's really about it. So we got the SBA 504, we got the SBA 7A, we got the Bolt, and then we got the Express, baby.
In and out, baby.
Yes, sir. The 7A is going to be a working capital loan that goes out 10 years. You could pretty much use it for any sort of purchase with inside your business. Could take anywhere from about 30 to, I'd say like 120 days, maybe 90 days, in order to get it fully booked and to be able to get the funds. The SBA 504, a little bit more of a drawn-out process, goes out 25 years. This is going to be for buying some sort of real estate property, possibly getting equity in a business, buying a heavy machinery piece of equipment. So it's going to be a longer-term SBA. Going to take a little bit longer for you guys to get approved. Could possibly even take up to 6 months. Then we got the Bolt, and then we got the Express, and those you could get approved and get funded within 30 to 60 days. So it's pretty fast. Only goes up to $150. And more times than not, you might not have to offer any sort of collateral. So that's what's advantageous about those. With the 7A and the 504, you're always going to have to put up some sort of collateral, whether it's a piece of real estate, home, cars, just some sort of pieces inside of your business and possibly even inside of your personal life. And then that's my biggest gripe against the SBA, is that no matter if you're getting like 151,000 plus, you're gonna have to put up some sort of collateral when there's lines of credit that go up to 250,000, 500,000, where you don't have to put up one thing.
Yeah.
So I think that's really my biggest gripe with it. But monthly payments,
Plus.
yeah, it's a
Long
plus.
terms.
That's a big plus.
Long terms,
Plus.
25 plus years. But at the
Depending
same
on
time,
what you need, that's a plus.
that's a plus. But you're gonna have to start making payments on the loan right away. So that-
One-time installment.
Yeah, exactly. So they're installment payments. So that's my gripe with the SBA. I think it's a great product. It's going to be cheap as all hell, but you don't have that leeway to draw down on it and use it as you would like. It's set up like a term loan, but longer term. That's if you want to think of it that way.
You really have to have a plan if you're going to try and get one of those.
Definitely, yeah. And that's why people like the 504 though, because it's really good for real estate purchases, buying some sort of commercial real estate project. And what's cool about it in that sense is that it takes a little while to get approved, so you do have time to get like your ducks in a row and find the property, line up the deal and stuff like that. Just hopefully the SBA goes through. That's another downfall, is that it's very strenuous, long drawn out process. There's a lot of paperwork involved if you're going after the 504 or the 7A. Typically you're gonna need like 2 to 3 years business personal tax returns, year-to-date P&L, balance sheet, debt schedule, personal financial statement, and possibly even other documents, but those are typically always going to be needed. So a lot more documents are going to be involved if you're looking to get 151,000 or more.
Yeah. If a gem just falls into your lap, SBA is not for you. You need that line of credit ready to go, or emergent cash advance for if that gem just falls in your lap, you want to take advantage of it. And I find it so interesting that a lot of SBAs require a life insurance policy.
Yeah, that's another weird piece about it.
Very
Another
interesting.
weird piece. Yeah, they
I
definitely.
mean, it's the
actually
federal
allow-
government. They're always going to get their money back.
Yeah, well,
One
they want
way
to
or
make sure.
another.
Yeah, they want. Of course, they're not just handing out free candy.
No.
Well, the EIDL loans were very, very neat as well back there in the
They were.
They
They
were
were
very
the
interesting.
PPP and stuff, but those were during rougher times.
Yeah.
Where the government did need to step in and help out small businesses.
And I tell you, the amount of clients that I speak to asking if they have any UCC filings on their company, and they say, I have the EIDL loan. Luckily, those UCCs are very easily subordinated. I could see how helpful it was for so many of our clients that we deal with, let alone the entire country, as far as small business owners go.
Who knows how many businesses would have shut down without it, really? I mean, so many already did, so without that,
a lot.
Funny
more
enough,
than half of them would have been clipped.
when I opened up my insurance agency, it was during that time, and I went for the EIDL, and it didn't go through because I was in business like after like the certain period. So then I went for the SBA, and I was like, oh cool, SBA, and they're like, all right, what do you want to collateralize? I'm like, I'm 21, I don't have anything. This is my mom's car.
Take it.
But yeah, no, they're like, oh, what do you collateralize? I was like, nothing. So I just wrote it out.
Besides the Express and the Bolt program, you do have to profit on your tax returns always. The Bolt and the Express could take into account, wages that you've paid yourself as the business owner. So say you were negative 200,000 that year, but you paid yourself 200,000. They'll look at that possibly if as the business owner, if you pay yourself that. If you bought a big piece of equipment for the business that's making you lose money that year, buying a piece of real estate, anything like that. So they'll actually look into that and possibly give you the benefit of the doubt. But more times than not, that you have to profit on your tax returns, which you don't necessarily need to for a line of credit, depending on the dollar amount that you want. And a lot of other financing products. So that's another, I think, downfall of the product.
Definitely very cash flow heavy program.
Very cash flow heavy.
They want to make sure they're securing their assets at the end of the day.
Yeah.
Government doesn't want to lose.
That's another thing too, where SBAs are kind of cool, is they can get kind of lenient on the credit as long as the cash flow and the business is doing well. So if I'm not mistaken, the minimum is like a 640.
640, 650
for certain programs. As long as your cash flow is good, you can still obtain it.
Yeah.
So that's amazing.
Good luck getting it pushed through, though.
Yeah, that's when you're gonna be looking at like the Express or the Bolt. Like a lower end SBA if you have not as good credit. Definitely.
I still think that's a great program. I mean, having that subpar credit and still being able to obtain one of the cheaper financial programs is definitely an advantageous thing in a way.
Definitely.
If you have the cash flow and the collateral.
Yeah. A lot of business owners get into commercial real estate, so we do a lot of 504 over here. And what's really cool about us is that, obviously, we're offering alternative and traditional financing products. So, when they're in Appio's program or in the line of credit program, sometimes they'll have time to set up an SBA, or like right after the program, they're like, hey, like, do you guys offer like the SBA? Like, I'm definitely looking to get into the SBA, and then we'll shoot them over to our, our commercial department here. So it's definitely cool how like the programs kind of like really work and like simultaneously together.
Yeah,
it's
we
nice having
definitely
them
do
all
a
under
lot
one
of SBAs right after we get out of the Lexlaw program.
Definitely. Yeah, definitely.
Big upside of having everything under one roof. We can just keep the ball
Sure.
rolling, keep it flowing, and keep customers for life that way.
Well, that's the downside of a lot of our competitors. Competitors.
Me too. I love it.
I'll take a Suffolk Community College guy like this over Deloitte. But whatever. Anyway, yeah. I mean that's just what really separates us. We really are that one-stop shop, and we do offer every single financing solution. So
that vertical alignment. What do you call it?
Oh, vertically aligned. Yep. Yes, sir. Yeah.
Vertically aligned business model.
Boutique style.
Yes,
let's move into our next product, and I'll let Tom take the floor with this one. So when you don't profit on your tax returns, and you need money tomorrow, and you need quick access to capital, and you know what product I'm about to talk about.
One of the most versatile programs in the entire industry. Honestly, one of my favorite. It really comes into play when certain scenarios pop up in a flash. It's the only financial program that's ever going to get you capital in your bank account as long as you're attentive within the same workday. It's quick, easy turnaround time, usually shorter term financing with great prepayment bonuses for the most part. That is our working capital merchant cash advance loan. Yeah. It's one of the easier loans to obtain, strictly based off of cash flow, deposits, daily balances, things of that nature. Very low document overall. Typically, you only need a couple bank statements and an application to get an approval. It's so much weight lifted off of the business owner's shoulders to be able to obtain this financing, rather than going and sitting at a bank or filling out literal endless paperwork for an SBA or gathering documents for certain lines of credit.
We text people and get them funded.
Exactly.
Text.
Exactly. That's one of the biggest things about it. Business owners are so busy throughout the day. Something comes up and they need capital. They can't just take a whole day off. That business is their life. Yeah. So being able to simply text their guy, Frankie over here, or Corey or Ryan, and be able to have quick access to that capital within 6 hours it's second to none, really, in anything in our industry.
It's mind-blowing. And it's a newer financial product, so most business owners, I think, nowadays are familiar with it, but some you still need to educate them on it. But like Tom said, I mean, it's the perfect quick injection cash flow into your business that you can need at any point in time. And you don't need to be very qualified to do it. You could have $10,000 in deposits coming into your bank account on a monthly basis. Does need to be into a checking account, no savings accounts.
Business checking account.
Business checking account. Need to have true deposits, so Zelle, Cash App, Venmo, all that is not going to count. Needs to be wire payments from a vendor. Needs to be cash, could even count to a certain extent. ACH payments, checks. So anything being paid from a customer is going to count as true revenue. Inside of cash advance, like Tom said, there's not a lot of credentials to apply you. Basically, there's lenders on like a scale. So we have A, B, C, or D lenders. If you guys Google that, the mortgage industry is going to pop up, so don't Google it. And it's just our way of being able to tier out the lenders. And we tier them out basically by the terms that they give. So the better lenders, like the A lenders, are going to give anywhere from maybe 12 to 36 months. We're really 12 to 24 months.
Yeah.
The B paper lenders are going to give anywhere from like 9 to 15 months. C paper lenders anywhere from like 6 to 9 months. D paper lenders could be anywhere from like 3 months to 6 months. So it really depends on the term. Most lenders are still going to be expensive. So like for instance, On Deck, they're a very well-known A paper lender. If you take their 6-month product, they could be as cheap as like a 1.15,
Yeah.
1.15 factor rate, which we'll dive into. And their 24-month product could be as expensive as a 150. So still could be just as expensive, each tier of lender, but it's the term that really matters.
Yeah. I think that's one of the most fantastic things about it, though, is a lot of the times business owners are looking for the quick injection to capitalize on the opportunity,
Yes.
whether it be obtaining inventory for a project that's coming up or a piece of equipment that just went on the market that for a seal that they know that they can profit off of almost immediately, but they need that money and they need it quickly. That's the only thing that's going to do it for them, and they'll be able to pay it off quickly. So the term actually works out a lot of the time. If it is
It's the
shorter.
only other product that there is where if that gem does fall into your lap that you can use that to make that happen besides a line of credit if you prepared
Correct.
yourself properly.
Yeah.
If you didn't prepare yourself properly, this is the product for you for sure.
As a business owner, you definitely need to make sure that you're ROIing though. Merchant cash advance, like Tom said, it's going to be shorter term and it's going to be more expensive than a traditional financing product. So MCAs are based off of factor rates. It's not going to be a traditional APR that compounds. It's a one-time set cost of capital. That's what a factor rate stands for. So basically how it works is you have one and then point, and then there's 2 numbers after that, and then whatever the 2 numbers after that are how many basically cents on the dollar or the percentage that it is. So if it's a 1.15, that's going to be 15% or 15 cents on the dollar. If it's a 1.25, that could be anywhere from, it's going to be, I'm sorry, 25 cents on the dollar or 25%. Like I said, it's a one-time set cost of capital. So if you get a 24-month MCA and it's 25%, it's a 1.25 factor rate, you're really paying 12.5% a year broken down. It's not going to compound like APR. It's not going to be 25 times 2 and it's 50%. It's just a one-time set cost of capital. If you look at MCA products, they might appear more expensive on the front end, but on the back end, they actually are a lot more cheaper than other traditional financing products. I'll give you an example. So SBA, if you take out a 10-year SBA 7A program, and the rate's 10%. That's like an average rate right now.
Yep.
And that compounds every year. 10 times 10 is 100%. So that's what you're paying at the end of the loan is 100%. For a merchant cash advance, if you get a 2-year merchant cash advance, 24 months, it's a 1.25 factor rate, you're paying 25%, 25 cents on the dollar. So although it's shortened up in the 2 years and you don't have the 8 extra years, to pay on it, it depends on what you're using the product for. So at the end of the day, it does end up being cheaper, but it needs to be a product it needs to be something that you're turning the money over a lot quicker, like an inventory purchase, like Tom said, or like you're buying a piece of equipment that's going on the market that you need to buy today. Something of the sort like that. The ROI needs to make sense for the business, and obviously, if it's more expensive and it's going to be a 1.25 factor rate, which is like an average factor rate that we sell, you need to make sure that you're making at least 30, 35, 40, 50, 60, 70, 80, 90, 100% on the money. Yeah. And as we know for business owners, if you're in a good business, obviously, your margins are going to be good. So how much does it cost to make a pizza pie? Maybe $1,
$4,
$2,
yeah.
$4, maybe max, $1.50. Renzo's probably makes it for $2. Amici's makes it for $1. And better quality.
Clip that. Clip that. Send that to me right now.
And what do they sell a pizza
What's
pie
how
for?
long are we in?
25.
They sell a pizza pie for $20-25. So the margins on business are supposed to be good. So you just need to make it make sense. And sometimes we'll have a file on our desk and they'll go to the closer. Closer sees that they're only making 25% on this deal. The factor rate's a 1.23. We're going to explain to them, listen, it makes sense to a certain extent. You're going to profit 2%. But at the same exact time, this tractor that you're going to be getting that you were renting for years,
Yes.
now that you have it out, it's bought outright, it's now going to make more sense for the business. Or maybe there's he needs to do something and it's 30, it's going to be a 1.30 factor rate and he's only going to profit 20%. Then we'll straight up tell him, like, listen, like, Mr. Business Owner, this is not going to make sense for the business. We need to get your credit in a better place in order for you to qualify for a more cheaper traditional financing product.
Absolutely. So what's also great about
Yeah.
merchant cash advances is,
I'll come back.
different lenders will come behind other lenders. So you could already have a position out, and you're working on paying that off. It did what it needed to do for you. Now your business is doing better. You got your piece of equipment. You got your material.
Yep.
Another opportunity arises. No problem. We could resubmit you to a different set of lenders that are more than happy to come behind the previous lender with the current cash flow being the way that it is, and give you another position that fits the profile in the best possible way.
Yep. And they're renewable. So if you got
Renewable is huge.
if you
I
got a
forgot about
position,
that
a
one.
first position, and you make it usually it's anywhere from 40 to 60% way through the loan, that lender will give you a renewal, and as long as you're making your payments on time, no hiccups, credit stays the same, revenues the same, or it's going up, they'll give you more favorable terms, which is really cool. So it's like incentivizing the business owner, you know what I mean, and making it worth, taking out this financing product, which is really cool. So like Tom said, you can't get multiple, MCAs. When you go to Chase Bank, you can only get one line of credit with Chase Bank.
Yeah.
And more times than not, they're not going to want to give you other financing products. Like they're not going to want to give you a term loan, an SBA. Maybe they'll do like an equipment loan fee or something of the sort that's a little different. But with us, could get you multiple MCAs as long as your cash flow warrants you being able to get it.
Yeah, I mean, on my end with the traditional lines of credit, if you get a line of credit from Chase Bank, they have first UCC filing. Most banks won't come behind that first UCC. That first UCC, they require that their first UCC filing. Give myself tongue twisters here, madam. Although we do have banks that do have specific banks that will come behind that UCC filing, even if you have an SBA, even if you have a merchant cash advance, even if you have another line of credit, and you have a couple of UCC filings, or maybe even from some equipment. We do have lenders that we can stack their lines of credit as well, but it's definitely not as common in the industry.
Definitely.
Well, what I was going to say before is Appio said this in the past, like there's the ass for every seat, but like you can have your ass in multiple seats sometimes, like an MCA could be great while you're getting a line of credit, like you'd be going for that line of credit, it's going to take you a few weeks, you're gathering your documents, you're doing whatever, but that piece of equipment's there now. You go, you get that MCA, you get your piece of equipment, and then, maybe you use your line of credit to pay off that because now you have a prime rate, everything's good, it's a little more of a term, whatever you need to do, but like you can utilize multiple products in certain situations. And I know I'm a big fan of, you get them into the one program, and if they need something now, let's see what we can do for that as well.
Yeah, it's so important that you said that. So important that you said that because that happens with so many of our clients. My process is a 2 to 3 week, sometimes 4 week process. If we have to fix your credit beforehand, it could get stretched out to 2 months of a process. We want to do it right and get you the dollar amount and the terms you're looking for. And you came looking for financing for a reason. You needed money, and you needed it sooner than later.
Yeah.
So having that available to you, having having your cheeks spread out across different seats is definitely important.
And what's cool is that alternative financing as an MCA and traditional financing, they don't clash together. You can have an MCA and you can get a line of credit from a bank, or you can get an MCA if you have a line of credit from the bank. So the two don't clash.
Yeah.
Why they don't clash, I don't know.
Me neither.
Am I going to
I
ask
love it.
questions?
No.
Yeah.
But they don't.
They
So it's cool.
don't. I mean, that's why it's so cool that our banks like Data Merch.
Yeah.
The cash advances, they report to Data Merch. Most cash advances, merchant cash advances, they won't report to your business credit. There are definitely some lenders out there, and we
Some
know
do.
which lenders
Forward
do.
finance on deck.
Yeah,
Two good ones.
we know which ones that do, and so if one of our clients has one of those specific lenders and they're in bad standing with that lender, we'll tell them straight up, like, look, this is going to be difficult for this business of yours to get this line of credit because of your business credit. But most of these cash advances don't report.
Yeah, we have
so-
people defaulting on merchant cash advances, and we're getting them a line of credit with the bank. They're paying off all the merchant cash advances, the 2, 3, 4, 5 years they have, and they're in a way better position with their business.
on a path
Absolutely.
to solvency.
Yeah.
That's another great kind of unsung thing about the cash advance that, it's kind of overlooked, is the ability to subordinate debt. Even in private equity, you get your private equity guy puts in a large sum of capital into a company, and there's still a gap there that they were not able to achieve. So there's a senior lender in place. The merchant cash advance could just easily come behind any of that and fill the gap in so many different scenarios.
Yeah, 100%.
As long as it makes sense.
Yeah.
And one
Can't
thing,
make dollars if you don't make sense.
cash advance is not a loan.
No.
It's not
Gonna
a
say that.
loan.
No,
Frankie, what is it?
not.
It's an advance on a business's future receivables or sales. Never called a loan. It is not a loan.
Yes, sir.
Not a loan.
You know what is a loan though?
What?
A term loan.
Term
loans
loans
are
are
loans.
loans. Great transition, Grizz. Great transitions. Term loans. We're gonna be brief with term loans.
Yeah.
Yeah.
We're not the biggest term loan guys.
I love me a term
We
loan.
sell term loans. Don't get
we
me
do.
wrong, and we like term loans, but lines of credit, cash advance, SBA. It's kind of more the route that we like to go with our clients. But
Exactly.
let's talk about term loans. So a term loan basically is just going to be your average loan. It's literally like think of it.
installment loan.
Think of it like because that's what
It's
it is.
just
too.
your
It's
average
hard to
loan,
explain
yeah.
it. It's your average loan. It's like getting a car loan. You
Yeah.
get a 5-year term, a 5 to 10 year term. Obviously, car loans you only get 10 years, but for a term loan you're going to get a 5 to 10 year term. You're going to get a set rate. You're going to make set monthly payments,
Yeah.
and then you have a set payback, and then that's the loan. So
There it is.
you might get
Ladies and gentlemen.
50,000 at 7%, and you got 5 years to pay it back, and that's the loan.
And you get your business term loans, you get your personal term loans.
Yeah.
I wouldn't recommend personal term loans if you have a business. Obviously, go the business route, but personal term loans can be
Yeah.
advantageous in
Yeah.
certain
I
scenarios.
think it's good to have one or two in your lifetime so you have a better credit mix on
Correct, yeah.
on your personal credit profile. But you should never need to get a personal term. If you need to get a personal term loan in your life, it's because you're not in a good position.
Yeah, you might be consolidating some sort of
Consolidating,
credit card
yeah.
debt,
Yeah.
or
So you
some
can
sort
get
of
a line of
personal
credit.
debt. But yeah, definitely personal loans. Definitely never recommend getting a personal in the first place.
No.
At the end of the day, like business owners take out capital to grow their business. Regular people take out loans to get them
whatever
out of
they
a
need,
hole,
yeah.
and they're taken from Paul to pay Peter or whatever the term is.
If you are getting a term loan, make sure that there's no early payment penalties.
yeah.
You want to be able to when you're having some better years or better months to make a double payment, make a
Yeah.
couple of double payments within a year to wrap that up a little bit sooner. Try to save yourself a little bit of money and keep yourself in a good position. But I mean, especially with term loans, and I find it so interesting how it affects your credit is when you pay off a term loan.
Yeah.
It
drops your
initially
credit.
lowers your personal
Yeah.
credit. Because what it really is doing is it's yes your credit to debt ratio is better, but what's really doing is it's lowering your average credit age, and it's just I find it so
It's
bonkers.
so shot.
backwards.
It's so
Yeah,
shot.
it really is
Bonkers.
backwards.
So
Yeah.
shot.
Another big thing about personal loans, personal term loans, a lot of people get personal term loans to start businesses.
Yeah.
I wouldn't recommend that. Come to Lexington. We'll get you set
Get
up
your
on the
Lex
business
lock.
side.
Yeah.
Get you
Get your
in a much
Lex lock
better
with
position.
no time and business requirement, no document requirements, no revenue requirements.
I think that's something to touch on that I want to touch on is startup funding.
Yeah.
So startup funding, there's only a few ways to fund a startup. Obviously, if you are a startup business, as we've all been, and I think we've all looked for financing, it is like near to impossible.
Incredibly
So here are going to be the few different ways that you could do it. Number one is you get a personal loan, which
Yep.
we just talked about sucks. I don't need to dive into it. Boo. Boo, exactly. Number two is that you could borrow money from a family member or a friend, which
Nice. I'm not gonna put that down.
Very nice of them.
It's not,
I
not my
wouldn't-
cup of
wouldn't.
tea.
Basically
Not my
a
cup of tea,
personal
Nor do I have
term
a family or friend who could do that. for
Yeah.
me.
if you got the
This is true.
goals,
You know what I
and
mean?
if you got the goals to ask grandma to pull some out of her
Yeah.
social
If you have an
I'm not
affluent,
that guy,
if you have an
pal.
affluent
I'm not
uncle
that
from
guy.
Mount Sinai,
Yeah,
maybe
I
do
would
it.
rather be in a garbage man. And no disrespect to garbage man, but I'd rather be a garbage man than ask my grandma for a
benefits.
loan.
Yeah, you
That's
shouldn't
all
be
I'm gonna
starting
say.
a business if you need.
Yeah,
if
I'll
you,
save
you
my
know.
garbage man money and I'll open up a business. All right.
The only time it's acceptable is if you're 18 years old and you ask for $1,000 because you have a revolutionary business. it's whatever. Do not go to grandma for 20 grand.
Let's go to number three. Number three is that you get some sort of angel investor or private equity, which for one is pretty hard when you're opening up a new business,
Yes.
unless like
That's
you're very, very
experience.
backed, like you're a Mark Cuban who's very, very influential in the business world or space. But some people do it, if they think it's going to be a revolutionary business or revolutionary product. But what happens is that you usually have to give up some sort of equity inside of your business, which nobody wants to do.
No.
There was a company that I was watching the other day. They're a $1 billion company right now. I'm going to get the name of it for you guys after this. But they were so desperate in the beginning of their business, they gave up 25% equity for $10,000.
Wow.
Best investment ever for that guy.
100,000%. But
Yeah.
that's what happens to some of these startups because they just need money so desperately to get off the ground that they're willing to give up equity.
Yeah.
No.
Not my cup of tea either.
No.
And there's the fourth way, which you touched on a little bit earlier. And as crazy as this is going to sound coming out of my mouth, it really is the best way to finance a startup business, and that's through 0% business credit cards.
I thought you were going
What
to
do you
say.
think I was gonna
I
say?
thought you were going to say using all of your personal credit cards.
That is the worst way. That is
because
the
I
worst
get
way.
so
That's
many
another bad way.
clients.
That's another bad way.
That's
we
the
get
worst
so
way.
many clients that end up on my desk, and I'm
Yeah.
like, all right, look, you have a great credit profile. You have a good model going on here, but you're maxed out on every single one of your credit cards, my
Yeah.
friend. The banks are gonna hate you right now. We
Yeah.
have to take care of this credit card debt before we can do anything.
Yeah, and
And
that-
but I had to use that. I had to use my credit cards to start my business. Don't you understand that?
They do. But if they would have took out a 0% business credit card instead, all that credit would have reported to their business credit. Business credit's only based off of pay history, so your utilization does not matter. But your utilization matters on your personal credit. So that is I guess the fifth way that people fund and finance their business. And listen, we get it. To start up your business, you need to get any single fund that you could do to get it up and running. And business owners always over leverage their personal credit in order to start their business. At the end of the day, for me, screw my credit. I love my business. I could have a 400 credit. I wouldn't care as long as I have my business. It's my baby, and that's how business owners think. My business means more than having credit. But at the end of the day, now that screws you when you're looking to get better financing products when your business starts getting off the ground. And that's why a lot of people have to take out merchant cash advances, because they might just not be qualified for a traditional line of credit or an SBA or a term loan.
You could be doing $20 million a year and have a 500 credit score, and you will not get financing.
1,000%. So my best advice to you guys is, if you are thinking about starting a business and you are under 680 and with your personal credit score, you need to figure out a way to get it there before you start your business. Take out a few 0% business credit cards when you first start. Then now you could float all those costs for the year, for the 18 months. Some go up to 24 months, just depends. And then what's really cool about it is that most banks offer multiple 0% cards. So you could get savvy, you could balance transfer these balances over. Heck, I mean, you could get 2, 3, 4 possibly years of 0% business credit financing, to start up a business.
And a big thing too, like, think about your life as well. You're a person also. What if something happens to your car? What if you have to get a new house? What if you have to move?
Yeah.
What if you get insurance and now your credit's in the dirt because you just utilized it all for your business, and now your personal life you can't.
Well, that happens.
You can't get approved for what you need.
Insurance nowadays if you don't have good credit.
Exactly.
You can't even rent an apartment.
Insane.
You can't even rent an apartment. So it's definitely tough.
But Frankie, what if I don't do revenue and I don't have good credit, but I need financing?
Well, don't worry, Frankie.
Please get
What
this.
do I do?
I'm stumped.
Well,
Hold him back.
I'm stumped. I'm stumped.
Appio, can you help me?
Mr. Customer, absolutely, yes, I can help you. You have to have somebody in your life that has a little bit better credit than you do right now. Whether it's a friend, a family member, or somebody that you just got really friendly with at the bar last week. You have to have somebody in your life that has great credit that we can have a conversation with. And I tell you this, it will not affect their credit score.
It won't affect their credit score?
It won't affect their credit score because we're talking business financing here, Mr. Customer.
So you can get me business financing?
I can get you business financing utilizing a cosigner for your business, even if your credit is where it is.
Utilizing what?
God dang it, Appio.
Utilizing business financing.
Wow. Sign me up.
Signed.
That guy at the bar will probably do it for you, right?
Yeah, Jimmy from 7-Eleven.
Funny enough, dude,
Jimmy Sebs.
We've had a couple of women.
Oh my God.
We've had literally just a couple. I think it was just 2. We've had a couple of women.
Women got that
have found a guy at the bar, and we used him as a cosigner, and then they backed out, and then she found another one at the bar. Dude, we ended up getting this woman financing.
Yeah, the dudes are always like, I can't find anyone. My mom said no. Grandma said no. Women are like, all right, I got Johnny, I got Travis, I got Tyler, I got Frankie.
That's crazy. Most women are fishing for drinks. They're fishing for cosigning.
Dude, definitely. Dude, all the women in our pipeline who can't find a cosigner are actively still looking for a new cosigner. Yeah. And they really fully believe that they're going to get one. And I do too.
Really?
It happens all the time.
Really funny story, right? One time this woman calls into the store, and I answer it. And she's like, very abrasive. She's from Long Island, so she's very abrasive. She's like, what do I have to do to get business financing for a startup? I'm like, so I tell her, and she's like, okay, well, I don't have that. I'm like, okay, no problem. Like, do you have a cosigner? She's like, no. I'm like, do you think you could find one? She's like, yeah. No words. I didn't even get her name. Hangs up. Not 3 months later, I get a call. I answer it, and she goes, hey, I found it. I'm like, who is this? She's like, you remember like 3 months ago you said I need to find a cosigner? And I was like, I'll find one. And I was like, actually, yeah, I do remember. She's like, well, I got one. And we got her funded. It was great.
That's cool.
That was one of the funniest stories ever.
That's amazing. I remember that one too.
Yep.
That's cool. Let's dive into the next product.
It's equipment financing.
This is true.
What equipment financing is,
Great products.
getting financing for the equipment.
Yes.
And now, great product, but it has to make sense in the certain situations. You could be a restaurant, but they're not going to sell you a cement mixer.
Yep.
Like why are you going to, equipify that? But, you're a restaurant, your oven goes out, you need a new pizza stove, whatever you got going on, you go for the equipment route. Hey, Mr. Lender, I got this. I really need this. I'm doing X, Y, and Z. They take a look and say, well, this makes sense.
Yeah.
Go buy that piece of equipment.
Yes, sir.
And I know there's a different couple rules and stuff. Can you do it off something like Facebook Marketplace?
Yeah, you can,
right?
You can do a private sale.
Okay.
You can do a private sale.
Yeah.
It's a little more tough. There's a lot more documents that are going to be needed.
Yeah.
It's a lot easier to go through a vendor.
Of course.
But yeah, you could definitely get a private sale. So yeah, equipment financing is going to be anywhere between like 3 and 7 years. Rate's going to start at 7%. It's traditional APR, so it's going to compound. You could get the financing through a traditional bank. There's a lot of alternative lenders like North Mill, like Amur, that do FinPac, that do equipment financing. So you can really go through anybody. Obviously, the bank should give you a little bit of a cheaper rate. But these equipment lenders are willing to give out equipment financing all day long like candy. And the reason being is because the equipment's already being put up for collateral. So if you get a tractor trailer and you put a good amount down, you put 10,000 down, it costs you 50,000. You default on the first few payments, like boom, I already got your 10,000, and I just take the tractor trailer back and we take it and then we resell it. So it's not much of a risk for the vendors. So people are kind of giving out equipment financing like candy. But like Grizzly said, it needs to make sense to borrow. It needs to make sense for the business. It's something that could actually be of use for the business. There are some restricted industries inside of it, but most of your traditional industries are going to be cool, for equipment financing, even like trucking and getting new trucks on the road and stuff like that. Construction equipment is not a problem. Startup businesses could even get equipment financing, but typically you're going to need really, really, really excellent credit. So at least 700 credit you're going to need in order to get equipment financing. And I wouldn't expect to be able to finance a piece of equipment more than 100,000.
No.
And you can use personal statements too, right?
You could use personal statements, yes, sir. Some you could get no doc. You could do a no doc, just personal credit. Possibly it depends on the lender or the bank. It's possible.
What I find pretty neat too is that you don't just have to be financing a truck or an oven or a cement mixer. You can finance all of your computers for your office, all of your monitors, all your computers, all your desks, all your chairs, all your lights, all your staplers and everything. You can finance all of that within an equipment financing loan as well, which I find is really neat.
Definitely. And that's what's cool too, is it's not always a very dollar amount contingent on the individual piece of product. I mean, one of my first deals ever here was 3 extra large trailers for a trucker that was like $316,000. We were able to combo 3 within one deal, which is huge. You didn't have to individually finance each piece of equipment. We were able to just wrap it up in one offer and get it to them. Yeah,
we do have a lot of clients that come to us. They're like, look, I have the same exact thing. I have three trucks. I just want to get a loan to one loan. I just don't want to pay 3 different payments.
Yeah, and it makes sense. That's annoying. So if you find guys like us that can do that for you, it's just an extra win. And we'll get you a line of credit while we're doing that for you.
Yes, sir.
Heck yeah. It's probably, I'd say, like the third most sought out product for financing right now, right behind line of credit and SBA. I think at some point in time, there's a statistic on it. I don't know exactly what it is, but like there's a good percentage of business owners who end up financing some sort of piece of equipment for their business. A lot of these business owners, especially blue collar guys, they're renting pieces of equipment for a really long time. And then once you build your business, you're taking on a lot of jobs, and you start actively using these pieces of equipment every day on a weekly basis, it starts to make sense to start renting it over. To buy it, than to continually rent it. What is cool about equipment financing too is there's also leasing options. So in some businesses and some industries, equipment goes out of style. Just like the iPhones. Would you want to rent? Would you want to finance the iPhone 16 when the iPhone 17 is going to come out in a year or so? So it's kind of the same exact thing. That's why people lease cars. So and a good way to think of equipment financing is just think of it as a car loan. It's the same exact thing, same exact terms, rates. The collateral is literally the car. Obviously, you don't need like pay stubs or anything like that to get a car loan necessarily. You just need really good credit.
Does it go on personal credit?
Does it report your personal credit? It depends.
Yeah, it depends.
Yeah,
right?
it depends. More times than not, it's not gonna.
You could even use it for something like software too. Like you're some kind of tech company or something, and you need to get this consulting package so you could add this software. Like that's equipment. That's something you need for it. You can prove ROI with a product like that.
These lenders could definitely get really savvy in that sort of sense. But equipment's just a great product overall. I think literally at some point in time, every business owner should utilize equipment financing. It makes sense to start purchasing and adding to your fleet and start building up your business and getting your own products. But obviously, if you could foot the bill and you're able to afford buying it out of pocket, sometimes that might make more sense too. It really just depends on the return on investment. Just keep in mind at the end of the day, it is going to compound. It's traditional APR, so it's going to be more expensive than that 7 to 10% that they might tell you. So just keep that in the back of your mind.
Equipify.
Yes, sir.
Equipify.
Well, shoot.
It's funny.
That was a lot of products.
Yeah,
that was a lot of products. Let's do 2 more shout outs real quick. Let's talk about accounts receivable financing, asset-based lending. Real quick synopsis. Accounts receivable financing.
Fantastic.
It's an amazing product. It's an amazing product. So basically, if you're behind on your receivables, you're a construction guy, you're a trucker, and people are taking 30, 60, 90 days to pay you out, there are companies that will advance you out a certain percentage of each invoice or the total invoice, like maybe 90% of it, or they'll take 10% of the total invoice, and they'll basically front you the funds to float the cost of staying in business, paying your employees, getting
project.
Material.
It's a cash flow creator.
Exactly. It's a cash flow creator. It helps out your cash flow tremendously.
And cash flow is key.
Cash flow is key. Cash flow is king.
Something that's definitely very important to note with the AR financing is that it's not as much about your credit, but the people who owe you money and how they are. You know,
Exactly.
if you have a net 30, net 60 with Walmart,
Yeah.
all right, you can very easily get AR financing there. But
Yep.
if you have a net 60 with Joe Schmo's concrete company who's defaulted on X amount of loans,
Yep.
you're probably not going to be able to get that finance because that the lender is banking on Joe Schmo's concrete company to pay them back.
And you can get up to like 90% of an invoice, correct?
Yeah.
Yeah.
Yes, sir.
Which is beautiful.
Oh, it's beautiful. If your profit margins are good, I mean, losing 10% stinks, but at the end of the day, if you got to do it to stay in business, I mean, who's not doing it?
Yeah.
You know, who's not doing it? And it's not like you have to marry these people. You know what I mean? Like, there's a lot of times where you can get out of the agreement and the contract. Sometimes it could be like a year-long agreement, or it could be by an invoice basis. So make sure that you're reading over the agreement and you're talking to the lender on what's going down here, because if your business picks up in 6 months, you don't want to sign a year-long agreement with this factoring company. So definitely be very careful.
And you don't want to be stuck in a full invoice factoring thing too, where instead of like, oh, I just want to do this one,
Yeah.
they're like, no, you have to do all of them. You know.
Yes, agreed. Agreed. And then, one last shout out: asset-based lending. So if you own some sort of heavy machinery piece of equipment, you own some sort of real estate, some sort of asset inside of your business, and you want to get loaned money through that piece of asset, maybe because you don't have good credentials or whatever the case may be, then you could get a certain percentage of the loan to value off that piece of equipment or off that piece of real estate that a lender or bank will give you.
Yeah.
So it's a really cool product too.
Has its risks, obviously. If it goes wrong, then your
Yep.
equipment or your asset is being seized. But
Yep.
if you have the assets at that value to be able to do something, you're probably got a good business
Yeah.
move.
And it's
Agreed.
generally relatively inexpensive.
Agreed. Yeah. Could be as cheap as term loans, SBAs,
Yeah.
lines of credit. So definitely no doubt.
Solid honorable mentions.
Yeah, no doubt. Yeah.
I love invoice factoring, asset-based lending, invoice factoring
Invoice
specifically.
factory. Invoice factory is really
It's a
good.
great program.
It's crazy.
Yeah,
the
it saves a lot of
companies-
businesses.
Oh, one thing.
Are you talking about Under Armour?
No, I was going to say it's B2B heavy.
Yes,
if
it's
not
only
exclusive.
B2B.
Yeah,
it's only
exclusive
B2B,
B2B.
for accounts receivable
Yeah.
financing. A company that came up off of accounts receivable
Yes,
financing or
that's
invoice
the one.
factoring is Under Armour. Under Armour got in with Goodman. They're a very well-known factoring
Yeah.
company, and Goodman financed them when no one believed in them, and that's what really propelled Under Armour to be able to float a lot of costs and become, what we know today. So there are big, amazing companies that you might not know about that definitely, for one, take out financing, and for two, do factoring and do a lot of things to float costs. And at the end of the day, guys, if you believe in your business, you'll do whatever you can do to get it off the ground and running. And in my opinion, I'd rather give someone a percentage of my receivables coming in for a few months, a year, a few weeks, one job, than give up some sort of equity in the company.
That's a big thing that you said too, is don't be afraid of taking out financing. Just make sure you take out the financing that's correct for you.
Yes.
All the biggest companies in the entire world still to this day are taking out financing. Elon Musk still to this day
Yep.
is taking out financing.
My
Yeah.
best
And it's
advice
for a reason.
is find a very good, reputable broker.
Yeah.
You could go to Chase Bank, but they might not deal with your industry. They might not deal with your credit score. They might not have the product that you're looking for. You come to Lexington, we could pair you with the best bank or lender that you qualify for. No hard credit checks.
No
Line you up with the
obligation.
best lender.
I
That's
mean,
it.
I'd put my entire bank account on the line that if you look at any random average strip mall with stores in it, that every single product that we mentioned, somebody in that strip mall has.
No
Yeah.
doubt.
Every
No doubt.
single one that we mentioned
yeah.
today.
No doubt. There's a veterinarian's office that's in our pipeline right now for LexLock that is on Long Island. I'll tell you guys about it in a little bit. And they have a line of credit out they have a merchant cash out with On Deck and another MCA company.
Another on the
and
more
now they're
unknown
looking for a
one.
traditional line of credit. So definitely, like, even your veterinarians, even
Yeah.
big places that you wouldn't think, like, they all do.
Yeah,
They
and
all
they've been
do.
around for 20 plus years. They're very
Yeah.
successful around here.
you
Definitely.
might
You
need
never know when
financing.
you might need to float costs. You never know when business is really good or really bad. All right, guys. So I think it was a really good episode.
Yeah,
I agree. I
Educational.
really loved it.
Yeah. Very educational, guys. A lot of business owners, I hope you take this, you learn from it. I hope you come to Lexington to help you out with your financing, solutions. And, we're not looking to obviously make a sale on you guys. We want to be able, we're consultants at the end of the day. We want to be able to show you what we think the best financing product is. And, if you don't, work with us, that's totally cool. We just want to lead you on the right path to solvency to help your business out. And that's all we really care about at the end of the day. So please reach out to us, even if you just want to have a quick chat with one of our loan advisors, so you could just get a good idea of what might make sense to your business, the best product, and then you take it from there on what you would like to do. But at the end of the day, do your research, look into people, do your reviews, ask a lot of people, ask around, get some referrals, and I think that you could find the best financing solution for your business. Don't just go with the first guy you think, and don't necessarily just go to that bank that you've been working with since you were a kid.
Yes, sir.
Why don't you drop a comment telling us what your favorite product is?
Yeah. I got line of credit.
Damn it!
Merchant
I got a line of credit too.
Okay, what do you got?
Equipify.
Okay. Remy. What do you got? Term
Term
loan.
loan.
Oh,
One
term
term loan,
loan.
one term
I thought Remy was an
Remy.
SBA guy.
He looks like an SBA guy.
Looks like an
SBA guy?
SBA
Yeah, he does.
I'm like
he
tied
does.
between MCA and
He
Invoice
likes
Factoring.
he likes the big loans.
See, I'll put up my
long
camera
terms.
for a lot of credit.
With that note, guys, subscribe,
Like,
hit the bell, watch the
subscribe.
next
Yes, sir.
episode,
Bell.
drop a comment.
Smash that subscribe
The
button.
road to 200 subscribers, 200,000.
200,000.
We got a real special episode.
It wasn't that long ago where it was the road to 200.
It's true. We were talking about
This
it.
is true.
We got a special episode for them next week coming up too, right?
Do we?
Oh, we do.
think
Oh,
we
we
do.
do.
I hope so.
I think
Oh,
we
we
do.
do.
We're gonna
I
keep
hope
you
so.
surprised.
Oh,
Yeah.
we do. No, we do.
We'll see you next episode for that one.
Yeah, we will. We will.
You're gonna want to tune in.
You're gonna want to tune in. It'll be a good one.